Power of technicals yet again in oil and gas. In the crude oil, we have seen oil taking support from 84.5 and recovering strongly towards 85.5. We have mentioned why 84.5, 84.3 is a great support. On the other hand, natural gas has now come towards its stronger support zone at 1.9, which we see that if it breaks and stays below 1.9, the bears will take over. The chances appears to be less, or can we expect a further drop in net gas? And can the crude oil also see a drop? What is going to be our strategy today in order to profit trading crude oil and natural gas? We will see with the help of charts and indicators. This is the first update for the day. Next update will be released before the US session. Watch that as well. Just subscribe and press the bell icon to get the twice a day updates. Join the free Telegram channel for live market updates and be a part of the channel memberships here on YouTube to support the effort. Let's start first to look into oil, followed with gas. Watch. If you look at the crude oil on the hourly chart, see it is definitely forming a very good base here at 84.5 levels. We have seen it earlier rising from these levels and again coming to the same levels. It is trying to show a rise and a retracement. But if you look at it is forming lower highs, thus it is very important now for oil to stay above 85.6 levels in order to confirm a further rise. However, on the upside, we know that 86 and 86.6 is the zone which if oil breaks, you should treat this as bullish. Else, as long as 86.6 levels are not taken, we should not be treating this for a reversal. Stochastic has dropped sharply. MACD, if you look at MACD, is almost at the bottom and it is willing to deliver a third wave, creating the highs here. RSI comfortable. Coming to 2-hour charts. If you look at 2-hour charts, there is another crossover on the sell side in the 20 and 50 period moving average. The prices are trading with divergence from the moving average. It is converged here. Now, if you see it is staying beyond 85.5, 85.6, you can initiate. However, 86, 86.2 and 86.6, this is the zone oil needs to break. I have been telling this again and again. I am repeating this again. If and only if oil stays beyond 86.6, we should treat this as bullish. Now see what has happened with yesterday's move. See, it has come to double bottom levels. Now double bottom calls for it to move towards double top, and thus there could be bullishness which can be expected. Stochastic has retraced. MACD also has retraced sharply. It is now trying to cross over for a buying entry. RSI almost staying comfortable. Coming to 3-hour chart. Likewise on the 3-hour chart, similar is the observation. You can find out if you connect the dots here. Ignore these two tails. But yes, even if you count the tails, you will find higher lows and higher highs. So this is how oil has been trading. Where are the support levels? 85 levels, 84.8. Again, going to remain a great support, which we have discussed yesterday as well, that these levels are going to play a major role in deciding, and then 84, 83.8. So yes, certainly these levels are playing out a crucial role as of now. Stochastic rising, MACD has hit a bottom here as well. It is trying to converge crossover and trying to enter into buy zone. RSI comfortable. Coming to 4-hour, remember on the 4-hour charts, what oil has done? Rise, retracement. Now this is retraced, delivering lower highs, lower lows. This is a nice flag formation, which suggests that any move beyond 86, 86.6 is going to lead towards a tremendous rise where we can look forward to 87.1 and 88 levels. Stochastic rising after, and look at MACD, it has formed a complete drop here. It has hit to the bottom and it is now looking forward to converge. Now see, it has completed this journey. A crossover here can lead to bullishness, but right now it is not showing any such intent. RSI is comfortable. Coming to daily, and before we look into daily charts and I share the trading levels and the trading strategy, if you want to learn this art of trading, you can be part of my 30th mentorship batch starting 15th of April. In this batch, we focus on sharing all the key concepts, trading strategies, the tools, and the trade setups, which we have developed with the years of experience, with the help of which you can trade profitably and comfortably. You can join this batch and cherish the learning for life. Also, you can be part of my signals group. We are trading as per the signals, you can benefit. So write an email or ping me on Telegram for any of your queries. And those who had asked me to recommend a broker which is safe, secure, trustworthy with global presence and also which offers a swap-free account with the lowest spreads, you can find the recommended broker link in the channel and video description. If you join through the link, you can get the lowest spreads to offer and you can save a lot much on your brokerage charges, which you are paying to other brokers. Now, coming to back to the oil's daily chart. On the daily chart, if you look at crude oil, it is delivering lower highs, it is delivering higher lows. This is a zone of consolidation. Very, very important for oil to come out of this zone. Yes, it is trying to consolidate before it takes the direction. As we have seen oil trading with too much of divergence from the 20 period moving average, it has just consolidated, it has waited for the moving averages to climb up. Now the daily moving average is sitting at around 83.5, 84 zone, and in fact looking at the current levels it can continue to move upwards, breaking on the upside, because see, it has consolidated enough here, it has waited for the moving average to climb up and now can take a direction. Right now I can still see it consolidating. Stochastic is rising. Now this is a concern point on MACD. As you can see, MACD, it is taking a crossover here, which is on the sell side. Now see, this is diverging as well, and this is first red candle, so we have to be cautious. Also, one must say that the preceding candle is a red candle, and the current candle, if it continues to trade here on the downside below 84.8, 84.5 levels, we can say now we are looking forward to a sharper drop where it may try to come out of the consolidation zone, move towards 83.5 as the first targets and 83 as the next. So considering this, a buying entry today I will recommend is at 85.6 levels. You have to wait for 86, 86.2 and 86.6 as the three targets. You have to wait for it to come out of this zone, and once oil stays above 86.6, we can say that it has turned bullish, do not, and it is not going to look back. And then we will be looking forward to 87.1 and 88 as the next targets. So you can buy here at 86.6. Where you should sell? Ideally you should sell below 84.8, 84.5 zone, but to risk a little you can sell here at 84 point, or rather 85 itself, when you see the higher prices below 85, but this is still riskier because see, it is again going to be in the consolidation zone. So yes, if you're selling at 85 levels, you have to be cautious there for 84.8, 84.5, and then we can look definitely towards 84 and 83.5 levels. So take your positions accordingly. Now let's have a look at natural gas. Now look at natural gas. After the drop, we have seen it consolidating here 1.9, 1.89 zone, proving out to be a very good support. We have seen yesterday, and I have told several times 1.9 is the level below which only we can expect net gas to trade bearish. So yes, as long as net gas stays between 1.9, 1.89 zone, let's watch out. If you look at the 20 period moving average, this is right now sitting at around 1.94. And if you look at the hourly charts more closely, you can find after the rise, it has retraced, it has come to take the support, creating higher lows. So a reversal can be expected from the current levels. But let's have a further detailed look. Stochastic flat. MACD has seen good bearishness. It may try to convert crossover for a rise. RSI oversold. Coming to 2 hour chart. On the 2 hour charts, it is resuming its downward journey here, trying to drop towards 1.88. You can take a sell entry at 1.89, but then 1.88 and 1.865. These are the two support levels. You have to wait for it to break, and only below which we should treat net gas as bearish. Stochastic oversold, MACD trading with divergence and bearishness, RSI hitting the bottom here. Coming to 3 hour chart. On the 3 hour charts, you can see increasing bearishness, lower lows are getting created. We have to wait 1.88, 1.86 zone to be taken in order to confirm the reversal. Else, I will say net gas is still not bearish. Yes, it is coming out of the bullish channel. However, the real bearishness will be if it drops below 1.86 and in fact 1.84 levels. That will be the confirmation that now gas is turning bearish. Else it can bounce back. Stochastic oversold, MACD extremely divergent and bearish, RSI hitting the bottom here. And similar observation on the 4 hour charts as well. See, rise, retracement, rise, retracement. Now see, where did it retrace towards? 100 period moving average. Where it is retracing now? Again towards the 100 period moving average. This is the second bump, thus it can again reverse from the current levels. Stochastic oversold, MACD bearish, RSI at bottom, or it has dropped sharply. Now coming to the daily. Likewise on the daily charts, first drop, second drop, higher lows, higher highs, coming to take the support from the 20 period moving average and from the Bollinger Bands median here, which are situated at around 1.88 and 1.86 zone. So in sum, if we see natural gas dropping below 1.84, then only we should treat this as bearish. Stochastic has dropped, MACD is in green, trying to converge, RSI flat. So looking at this, For the day, I will recommend you to buy net gas. If you see it is staying above 1.91, that will be the level above which you can say it is turning beyond 1.91. We can look forward to 1.94, 1.96 zone as the first resistance. And beyond 1.96 is where slight bullishness will be observed here, which can in fact take the prices towards $2 levels. On the downside, I will recommend a selling entry at 1.89 levels. If you see the higher prices below 1.890, you can take a sell entry, wait for 1.88, 1.865, and then 1.84 zone. If these three targets are taken, gas will show extreme bearishness. So take your positions accordingly. I do not see it breaking below 1.84. Thus, you should be trading with caution with a trailing stop loss. Do like, share, and comment. See you again before the US session with more updates. Thank you. Have a great profitable trading day ahead. Thank you.